To talk about the ripple effects of all of it, let's bring in Dewardric McNeal, Managing Director at Longview Global and a CNBC contributor. Dewardric, welcome. In a minor way, we're not seeing a ton of, agflation, we'll call it. Say a little bit of push and pull, though, on deflation, inflationary front. Which one's more significant?
Well, I think at this point, there's a lot of concern about some of the deflationary potential that we see in the Chinese economy. Look, the data that we saw and reported for June really shows how vulnerable China is to both global economic conditions, Kelly, as well as geopolitical tensions. And on the latter, it shows why China has been so aggressive in trying to step up its diplomacy, but also its outreach to foreign businesses, begging them to stay put because a modest amount of de-risking, we see just how little room China has for that, Kelly. They are going to have to really figure out how to find a domestic way to stabilize their economy and grow. And the data that we just saw is showing that that's not happening at all. And the youth employment number at 21.3%, Kelly, this is a real concern for many of us because we know what the political instability, a number like that over a long period of time, could bring to China.
Sure. So one of the sort of start with the stimulus aspect of this, where people don't seem to expect much. Why is there just not much? I feel like Beijing has the mentality of it can do whatever needs to be done. I find it hard to believe they would just sit on their hands and not do more to try to stimulate a lagging economy.
A lot of people are scratching their heads, certainly those in the market who have been expecting this robust stimulus to roll out now for 2 quarters. And I just don't see it happening, Kelly, for a few reasons. First, I think with respect to the modest GDP headline figure, 5%, I think many people in the Chinese government still believe they can hit that number. But I think it's also important to note that China spent a lot of time trying to de-risk its financial sector, de-leverage its economy. And the fear here is if you let it rip, if you turn on the taps, all of that hard work will be gone down the tubes. And then we have to remember that there's a heavy debt burden at the local levels, Kelly, which they still haven't really grappled with because local governments really took on the lion's share of what it needed to fund the zero COVID policies that Xi Jinping put in place. So there's just a lot of concern about what it would do to the economy and all the work that they've done over the last several years to deleverage if they turn on the taps.
Sure. So if I were their leadership and I said, okay, well, my new #1 priority is fixing youth unemployment, how would I go about doing that exactly?
Well, look, I've been debating this. I'll tell you what I think. Some economists may push back on this. But look, I think instead of focusing on supply side, I think it's time for the Chinese government to get more creative, perhaps target households with some stimulus like we saw here in the U.S. And people will say, look, well, there's a lot of savings in China. It is true savings are elevated, but those savings, Kelly, are a safety net. It's not a license to spend. And so at some point, if you want spending to increase, perhaps you have to target households and try and get people spending again on big ticket items.